If you want to escape the rat race faster than your friends, you don't need lottery luck or crypto moonshots. You need leverage, low risk, and cash flow from day one. That's house hacking. And in 2025, it's still the most underrated way to buy freedom on a budget. Most people think real estate investing requires a big down payment, multiple properties, or years of saving. But what if you could own your first investment property, live in it, and have other people pay your mortgage from day one? That's the magic of house hacking. Let's break it down. House hacking means buying a small multifamily, like a duplex, triplex, or fourplex, or even a single-family home with extra bedrooms, living in one part and renting out the rest. That rental income covers part, or sometimes all, of your housing cost. Instead of paying rent or a full mortgage, you live for cheap or even free, while building equity and experience as a real estate investor. Now let's look at why house hacking is such a powerful launchpad to financial freedom. First, it cuts your biggest expense. Housing is most people's largest monthly cost. If you can eliminate or dramatically reduce it, you instantly increase your savings rate. Imagine saving an extra $1,000 or $1,500 a month, not by earning more, but by living smart. That money can now go to debt payoff, investing, or stacking for your next property. Second, you're buying an asset that pays you. Every month, your tenants are contributing toward your mortgage. You're not just saving money, you're gaining equity. And with time, rents go up while your payment stays fixed, boosting your cash flow year after year. Third, it builds your investor skills while you live there. You learn how to screen tenants, manage maintenance, handle repairs, track cash flow. You get reps as a landlord without being overwhelmed. This experience is priceless when you scale up. Now let's talk numbers. Say you buy a $500,000 duplex with 5% down using the Fannie Mae owner-occupied multifamily loan. That's $25,000 down. Your mortgage might be $3,200. You rent out the other unit for $2,200. Your net housing cost is $1,000 a month. In many cities, that's half of what you'd pay in rent. Over a year, you've saved $12,000 in living costs. Plus your loan's been paid down, your home might appreciate, and you've got real-world investment experience. But the real power comes from what happens next. After 12 to 24 months, you move out. Rent your old unit. Buy another property, maybe a single family this time, or another duplex. Now you've got two assets producing income. You've stacked equity, tax benefits, and operational knowledge. Do that 3 to 4 times over the next decade, and you've built a real estate portfolio that can replace your 9-to-5 income completely. Now let's get into how to house hack in 2025. First, get pre-approved with a lender who offers low down payment programs for multifamily. Look into Fannie Mae's 5% down or FHA's 3.5% down loans. You'll need decent credit and documented income. Second, find a property that fits the math. It needs to support part or all of your housing cost with the rent from the other units. Focus on areas with stable tenant demand and landlord-friendly regulations. Third, analyze the deal conservatively. Don't overestimate rent, don't ignore repair costs, and don't assume appreciation will bail you out. This is an investment. Treat it like one. Next, prepare to live in the property for at least a year. These loans are for owner-occupants. But after that year, you're free to move out and convert it into a pure rental. Another tip, start small. You don't need a 4-unit on day one. You can house hack with a 3-bedroom single family, rent out 2 rooms, or live in a finished basement and rent out the main level. Creative configurations work if you're willing to be flexible. Let's talk risk. What could go wrong? Vacancies, tenant issues, unexpected repairs, zoning or regulation changes. These are real, but they're manageable when you start small and keep reserves. Even $5,000 to $10,000 saved can help smooth out the rough spots. And yes, you might live next to or with your tenants. It's not forever. It's a phase, a strategic season, one that most millionaires would take in exchange for fast-tracking their freedom. House hacking also gives you major tax advantages. You can deduct mortgage interest, property taxes, insurance, repairs, and depreciation on the rental portion. This lowers your taxable income and boosts your true net returns. Consult a CPA to make sure you structure things properly. Now here's the mindset shift. Most people look at housing as a cost. Savvy people look at it as an asset. Even if your goal isn't to be a full-time landlord, house hacking gives you a safe, proven way to generate passive income while building long-term wealth. You don't have to start with 10 doors. Start with one. One smart decision now can save you thousands per year, teach you valuable skills, and give you options in 2 to 3 years that most people don't have in 20. Financial freedom doesn't require a lottery ticket or a six-figure job. It requires strategy, leverage, and action. House hacking delivers all three. If you're under 40, house hacking could be the single best move you make in the next 12 months. And if you're over 40, it's not too late. You still have time to use this strategy to reduce expenses and accelerate your freedom timeline. The question is, will you watch others do it, or will you start your journey now? If this resonated, subscribe for more financial freedom strategies through real estate. Drop a comment if you're house hacking or planning to. And remember, freedom starts with one smart move. Let this be yours.